Yes, good morning, everyone. I'm very happy and excited to welcome you all to the final review session of our Forex Morning Mastery as we delve into the final trading day. Hope you're all doing very well. And how was your week? Let's know in the comment section what your week was like. Well, for me, it has been quite interesting. We had some very profitable start to the week, though. The second half of the week, I missed some significant opportunities, which I will be sharing with you in a moment. And well, this week has been quite an interesting one. The Trump tariff have been the Trump tariff announcement have been the center of attention this week, causing global market chaos, boosting fears of U.S. economic slowdown, and keeping the Feds in the spotlight. And of course, this has put significant pressure on the US dollar as we see the US dollar continue to drop to the downside, giving a platform for the gold commodity to rise. Well, before we go into the technical details on the charts, it's important we also take a quick review of how the fundamentals had influenced the US dollar. Let's say what has really influenced the US dollar this week. The US dollar has been on a roller coaster actually, most struggling as traders react to a series of major developments in the market. The biggest shock came from the Trump's tariff announcement, which sent a shock wave across the global market and set the tone for anything else that will be coming up in the subsequent weeks. On Wednesday, Trump imposed at least 10% tariff on almost all imports and higher duties on key trading partners. Now, this has significantly influenced the market, raising fears of an economic slowdown. And recession fears is in the air right now, where investors are now worried that the US economy will slow down, forcing the Fed Reserve to cut interest rates sooner or later. And you all know what happens when interest rate cuts happens. Lower rates weaken the US dollar because investors will move their funds to other assets. That is a huge outflow from the US dollar portfolio. And then how does this influence the other commodities, especially the gold and the oil that we have been monitoring? Well, if we know currently the US dollar is at its lowest point since last year, October, I think, helping commodities like gold to hold their grounds despite some selling pressure. Now, today, the market is going to be high in the NFP. Reports coming up later today, which we're going to be looking at. I think we have, let's look at the economic calendar together. Okay, so today, can you see my screen? Hold on a second, I'm not sure. Okay, yes, I think we have it here. So today we're having the non-farm payroll coming in 12:30. Oh, sorry about that. And Ahmed, I just noticed that there is no screen. Sorry about that. Okay. So today we are going to be looking forward to the non-farm payroll, which is coming in 12:30. This is a labor-oriented data that gives us an insight into how many jobs was added into the U.S. economy, and of course, this excludes the agricultural sector. Then we also have the average hourly earnings coming up simultaneously. This is also a labor-oriented data coming up at 12:30 p.m. UTC. That's about 1:30 p.m. local time. Now, with this being said, if the job numbers disappoint, the market could price in even more Fed rate cuts, weakening the US dollar further. However, if the data is strong, we might see a short-term bounce in the US and maybe a little bit of recovery ahead of the weekend today. And we are going to be taking all of this into account while we review the current market structure. And then we also need to take note of the market reaction to tariffs. If trade war fears escalate, maybe like reciprocal tariffs against the US, investors might continue to sell the US dollar in favor of safer assets like the gold, the bonds, and the likes. And like I said, if there is a weak job data, we could be seeing a drop in the US dollar. But if the data is strong, temporary US dollar recovery could be seen. Then we're also going to be taking into account the fact that investors are betting on 4 Fed rate cuts this year. If this outlook strengthens, the US dollar could stay weak into next week's trading session. So we are going to be taking all of this into account while we review the current market structure, and at the same time we are also going to understand the fact that today is the last trading day of the week, and we all know that last trading days usually have their own psychological peculiarities, like market participants repositioning themselves ahead of the new week, profit-taking activities ahead of the weekend, where we may likely see price do a rebound, that is price moving in the opposite direction of the prior leading price action. So these are what we are going to be looking at as we delve into the chart. So let's run into the first asset we are looking at this week. The first asset we are looking at is the USOILSPOT, and what a week we have here on the USOILSPOT. A very volatile week, and though the first half of the week was very profitable for me, remember we had 3 buy positions on Monday where we capitalized on this buy move around the $69 area. We added another one above the $69.20 level. We also added another one at the $69.50 level, and of course the final one at the $70 area, giving us a minimum of 400 pips during the first half of the week. And the second half of the week, I did not trade the crude oil. I think I bought around here. On Wednesday, we talked about a trading setup around the $71 area. That was on the 15 minutes time frame, I think. Okay, this was it right here. So this is what we were looking at on Thursday. Remember, we had the range bound structure, and I can remember updating us during the New York session on, I think, a couple of hours into the New York session after noticing buy pressure resume. Remember, we were taking out of the sell position at the $70.55 level at break even. Then I readjusted my setup, opening the $70.78 area for buying ideas, and then adding another one at the $71 area before that tariff announcement from Donald Trump, which sent the price of oil crashing to the downside. So I was out of the market since Wednesday, and in fact I missed out on all of this bearish move all the way to the downside. As you can see, I think we had over, how many pips move was that? It was a massive turn to the downside. That's a minimum of 600 pips, and I think the reason why I stayed out of the market was basically because of the uncertainty surrounding the Trump tariff. I never knew how the investors is going to digest that information, and of course I was already profitable on the US oil portfolio already, so I didn't want to risk any of that into a market that is quite uncertain, especially after the Trump's announcement. So with that said, going into today's trading session, how do we intend to trade this? And in fact, the way things are going, I'm beginning to doubt if there will be an opportunity for me on the US oil today. I don't know if price will come back and retest the structure. But if we look at the fundamentals, it is expected theoretically that since the US dollar is weak at this point, the US dollar is near its lowest level since October, and market participants expecting that the Federal Reserve may resume rate cuts due to economic slowdown fears. And we all know how a weaker dollar supports crude oil prices, making it cheaper for foreign buyers. So what do I mean by that? So if the dollar is cheap, what happens? And the US oil is a US dollar denominated asset, and if the value of the dollar is very low, it becomes cheap for other currency assets to buy. And if it becomes cheap, what happens to the market? We tend to see an increase in demand because majority will want to capitalize on a weaker US dollar to stock their reserves with crude oil at this point. So theoretically, that is the expectation. But with the way things are going right now, price had continued to drop. Thanks to trade war fears, where the Trump's tariff raises concerns about global economic slowdown, which could weaken fuel demand and pressure oil prices. Then we also have the OPEC Plus planning to increase supply. Their last minute meeting, they decided to phase out production cuts, adding 411,000 barrels per day in May. This falls over supply concerns and weigh on crude oil prices. Then the key U.S. economic data today is going to be playing a significant role. If job numbers are weak, oil prices may find temporary support due to a weaker U.S. dollar. And if the job numbers are very, very strong, we may continue to see a downturn in the oil prices. So if I'm going to be looking for any form of bullish approach today, I will be leaning towards the weaker US dollar or further trade tension ease, and then look for buy opportunities on dips if we can identify a demand zone. But if the OPEC Plus output increases continues to weigh on sentiment and the trade war worsens, crude oil may continue to fall. Now, this morning while I was looking at the chart, I think I was looking at the 15 minutes time frame. I saw a beautiful setup to guide our trading decisions today, and this is more or less looking like a downtrend continuation pattern in the form of a descending channel. So we have the bearish impulsive move all the way down. We had a support line here, that is the formation of that descending triangle. And we know when we cite a descending triangle on our chart, which is theoretically known to be a strong downtrend continuation pattern, we want to see price break down the support line to incite more selling ideas. And look at what happened this morning. While I was doing this, I missed out on the sell at the breakdown of the $65.75 level. And what I'm doing right now is to exercise patience and wait for price to maybe come back and retest the structure. That is price coming back to retest the structure, which I doubt will happen, or wait for price to consolidate a little further, maybe form a bearish rectangle pattern or a flag pattern, then sell the breakdown retest of the structure. So at this juncture in the US crude oil market, I'm going to be stepping aside, waiting for a better opportunity to mature before I jump into any trade. So this is the current structure I'm going to be using to navigate this market today. So let's see if the market will come back, retest the structure. That is my first option to sell. If it comes back to retest the structure, I will be looking out for bearish signals around the trend line and the $65.75 level. So I want to see continue selling pressure around that area to capitalize on the bearish move. Now, if that does not happen, that is price does not come back to retest structure, then I will be waiting for a consolidation, maybe something like a range bound structure, which could take about 2-3 hours to mature, after which a breakdown retest of that structure will be a good opportunity to sell. So those are the two perspective I'm looking at to continue the downtrend scenario. Now, if it so happens today that the US dollar weakens further or trade tension eases, gold could attempt a recovery around this area. Now, if I want to be looking for buy opportunity in this structure, let's say price goes through a consolidation phase from this particular area. Let's say price goes through a range bound structure, and then I will want to see price break above, retest structure, join a temporary move, and as soon as price gets into this descending trend line or the $65.75 level, I will move all stop losses, secure the current buy position while I wait to see how the market reacts to that trend line. So if price breaks out and retests the trend line, that will give us more opportunity to continue the uptrend move. But if buyers find it difficult to break through, that is, we continue to see selling pressure around the descending trend line, this could incite a downtrend continuation. So I will definitely be updating us, especially maybe 30 to 40 minutes into the NFP release, as I continue to monitor price action around here. Hopefully we have a new trading setup that can help us jump into any positions here. So in the meantime, price is way far from the current structure we have here, so it's advisable that we exercise patience and wait for the structure to mature. So that is basically what I'm going to be doing here. I hope I made myself very clear. If you have any questions or you need some further clarification, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. So I see your comment, Anis Ahmed. Good morning to you, and thanks for the feedback for the other time. So you say here, I tried opening your website, it does not open at all. Can you please check? Yes. We're having some technical issues, and we are working on restoring it. I am aware of that. So probably in a couple of weeks from now, we should be having it back on. So stay tuned in for that one. All right. Thank you very much. All right. So in the absence of no questions, I guess we are all on the same page. And with that said, I think it's time we move on to the next asset on our watch list for this week. So the next asset we are looking at here is the GBPUSD. This is the first time we are trading the GBPUSD this year. We have been trading the USD JPY instead, but this week I saw an interesting setup around the 4 hours time frame, which made me convinced to trade the GBPUSD. And thank goodness we were able to take on this, and we were able to capitalize on some significant opportunities. Now let's rewind to look at how the week started for us on the GBPUSD. So at the beginning of the week, we identified a descending channel, right? We connected a series of lower highs, giving us this resistant line of the descending channel, and then we connected a series of lower lows, giving us the support line of the descending channel. Now something interesting happened last week, Thursday, where we saw the resistant line of that descending channel break out for the first time. And for us, this is a technical signal that buyers may likely be taking off at the market anytime soon. And the consistent retest of the trend line was more or less a good opportunity for us to continue that uptrend scenario. Though it took a while before price action gained momentum. Remember, we had bought the GBPUSD at the beginning of the week, somewhere around here, and for the first 2 days, for the first 3 days, I think, price was trading within the red territory. We were all in loss on Monday, Tuesday, and Wednesday. It was more around this area. And during our live stream on Wednesday, I told us all here that I still maintain a bullish bias around the structure, considering the fact that market participants continue to find the 1.28800 level has a support line. You can see I shared this with us on the 4 hours time frame. Let's look at it again on the 4 hours time frame. So let's go to the 4 hours time frame. So we had this structure here on the 4 hours time frame, where since the beginning of the month of March, that area around the 1.2880 areas has seen sellers find it difficult to break through. And for the fact that this was the case, coupled with the breakout retest of the resistant line of that descending channel, I had that strong feeling that price could continue that uptrend. And thank goodness we were able to stay faithful to our analytical approach. And immediately during the New York session on Wednesday, prior to the tariff announcement, we saw the momentum increase. Then we also added another buy position at the breakout of the 1.29720, which we acknowledge here on Wednesday. So we had 2 buy positions, and we saw price move about, the first buy position moved about 280 pips, while the second buy position moved about 220 pips before this all bearish momentum began this morning, I think. Okay, yesterday, it began yesterday. And since I was taken out of this market, I didn't trade the market. The market was just too volatile. I was waiting to see how how investors digest the information surrounding the Trump announcement before I want to be making any informed decision. So throughout yesterday, I did not trade. Now, if we look at the fundamentals, the chances for the pound sterling to rise is still very there, considering the fact that Trump imposed only 10% tariff on the UK, which is lower than the rates on other major economies like China, Euro, and India. Now, this gives the UK a relatively better trade position compared to other US trading partners. Then secondly, there is a potential delay in the Bank of England rate cuts, as we all saw in the recent economic data from the UK, rising inflation risk in the UK due to higher social security contributions, but which may force the Bank of England to delay aggressive rate cuts, and this definitely could make the pound sterling a little bit attractive for investors to put their funds in. Now, in as much as this is the case, the last 24 hours have seen a nosedive, which for me may be considered to be profit-taking activities ahead of the weekend, or profit-taking activities following the announcement of the tariff by Trump. Then another factor that we cannot ignore is that Trump's reciprocal tariffs are triggering fears of a global economic slowdown, which could spill over to the UK and weaken investors' confidence in the pound sterling. Then we also have the IMF narrative, which sees Trump's tariff as a major risk to global economic stability, raising concerns about the UK's economy, which is just trying to stay above average in the last couple of months. Now, with the way things are going now, today is going to be another major day in terms of the US non-farm payroll reports and the Fed chairman's speech, which could trigger US dollar volatility, affecting the GBPUSD moves. So if Powell signals a more hawkish stance on inflation, the US dollar could strengthen, pushing the GBP lower. And if the other side is the case, we could see the price of pound sterling rise again. So in the meantime, we will keep our options open. So we will look at buying if Powell sounds dovish or the NFP report is weak, and look out for selling ideas if Powell remains concerns about inflation and the NFP report is strong. So this morning, while I was looking at the market around the GBPUSD, I also missed out on this opportunity. I saw this morning, a range bound structure, and while I was analyzing it, price had already broken down the support line of this range bound structure I had here. So you can see I placed an alert around the support line. This is it right here. I placed an alert there to notify me if price ever comes to retest that structure so that I can join the sell. And in the last 1 to 2 hours now, price is here to come back to that structure. So what I'm doing here is just wait for new structures to emerge before I can start considering selling. So this was actually my trading setup this morning. I missed out of it and I was waiting for price to come back, but price has yet to come back to that particular level. And as you can see, price continues to drop and is back into the first resistant line for the week, heading towards our key level for this week, and of course heading towards the 1.28800 area, which is also around the resistant line of that descending channel we identified earlier. So what I will do right now is just step aside from the market, wait and see how the market reacts to the zone. So this zone here that is between the 1.29720 and the 1.28800 level is going to be playing a significant role today. So I will be looking out for buying ideas. Remember, I talked about the lower US tariffs on the UK. We talked about the potential delay in the Bank of England's rate cut, which is looking like it's going to favor the pound sterling. So I want to see price drop into this area. Then I want to see signs of this retracement phase ending. And how do I know this retracement phase is ending? Well, I want to look out for reversal patterns like double bottom structures, head and shoulder patterns, whichever case it may be. Then I will want to see price break out of the neckline of these reversal patterns before I jump into a buy position. This is going to take a while before it matures, and if possible, maybe we will just wait till next week when we'll come back to take a trade when the setup has fully matured. So in the meantime, I'm stepping aside from the market, waiting for the structures to mature. But as soon as I see a beautiful setup to help us navigate, I will be updating us on my Telegram platform. So this is my simple view on the GBPUSD. Let's see how the market plays around the 1.2792 and the key level for the week. So we keep on exercising patience around the structure. So that is my simple view on the GBPUSD. Let's wait and see what happens in the next couple of hours. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final assets on our watch list for today. Stay tuned in. Hello, Michael Mora. Good morning to you. It's been a long time I saw you. How are you doing today? Happy to have you around with us. All right. So, in the absence of no questions, I want to assume that we are all on the same page, right? Let's see what happens around the GBPUSD. Let's see how the market reacts to the structures we have here. And of course, this will determine whether we will continue the uptrend from that area. And like I said, I will update us accordingly on my Telegram platform as soon as a beautiful setup is identified. Michael Moa says, what time frame do you look out for the reversal pattern? Well, at this point, and based on this current structure we have here, I will look for it here on the 1 hour time frame. I'll look for it here on the 1 hour time frame. I'm not in a hurry to take a trade on the GBPUSD. I'm not in a hurry. I'm profitable on the GBPUSD, so I can't afford to risk what I'd make on the GBPUSD this week on some flimsy setups on the lower time frame. So I really want to see a significant, a matured reversal pattern here on the 1 hour time frame before I jump into a trade here. And if it doesn't happen, I'll pass the trade and then wait till next week, Monday, where we will be coming back again to review the structure. So that is that for the GBPUSD. And based on this current structure we are seeing here. So the time frame I use actually varies from asset to asset, from structures to structure, depending on what I see and what the sentiment in the market is looking like. So I don't go anything lower than the 15 minutes time frame. So let's see what happens around this area. I don't want to I'm not in a hurry to jump into any trade here on the GBPUSD. So I will wait for significant reversal patterns before jumping in. All right. Okay, you're welcome. So in the absence of no further questions, I guess we are all on the same page. So we shall be moving right into the final asset for this week. Stay tuned in. So the final asset on our watch list for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what an interesting week we had here on the gold commodity. We saw price hit another record high at the 3,168 area before we saw a retracement move back into the 3,070 level. And thankfully, we were able to be part of that move. Remember, at the beginning of the week, after sharing my weekend video on the gold on the gold commodity, we captured this bullish move right from the $3,086.50 level. In fact, I was running with over 400 pips on Monday. Right during the Forex Morning Mastery on Monday, we were running with over 400 pips on this as we jumped into this move all the way into this area before that bearish momentum began on Wednesday. And then the volatility happened during the Trump announcement, and throughout yesterday I did not take any trade as I felt it was necessary that we wait for the market to stabilize before considering jumping into a trade. And of course, at this hour, investors are still digesting the implication of Trump's tariff announcement, and this could take a while. We don't know how soon that will be, as we could still see choppy market conditions, especially considering the fact that price is within uncharted territory. So the uptrend scenario we've seen in the gold, I still think remains very much intact. thanks to concerns over the global economic fallout from Trump's reciprocal tariffs, which obviously has driven investors towards gold as a hedge against market uncertainty. We also have the market anticipating 4 interest rate cuts by year end, starting in June, as Trump's trade policies increases recession fears in the United States. And we all know what happens. Lower interest rates reduces the opportunity cost of holding the gold commodity, making it much more attractive for investors. Now, due to all of these fears and recession concerns, the US Treasury bond yield is also dropping seriously. At the moment, it's below 4.0%, and this is the first time in 6 months that the value of the US Treasury bond yield will be. And this has weakened the appeal for the US dollar, and we know how directly proportional the value of the US Treasury bond yield is to the US dollar. If the US Treasury bond is doing very well, so will be the US dollar. And if the US Treasury bond is doing badly, so will be the US dollar. So at this point, it is not doing very well, and there is a high chance that the dollar will continue to drop, making the gold commodity cheaper for other currency to buy. Then from the economic perspective in the United States, we saw economic events during the week. Things are not looking rosy for the United States. We saw the ISM Services PMI fell by 50.8. We saw that here. That was a red flag. And this is the first time this will be happening in a very, very long time. Throughout last year, the ISM Services PMI was way above 54, I think. 54, I think it went to as high as 59 during the course of last year. Now the data is coming in at 50.8, just a little bit above the 50 mark. Then we saw the ISM Manufacturing PMI also coming in lower than 50. These are not good figures from the United States. And the jobless claim count also came in slightly declined. So the overall labor market uncertainty supports expectations of future economic weakness. So for me, I still believe that the path of least resistance for the gold commodity remains to the upside. Now, if we compare this with potential for a US dollar rise, though the gold is experiencing a minor correction right now due to profit taking and repositioning ahead of the US non-farm payroll report, and of course the NFP report is expected to show, what was the expectation again? Okay, we are looking at a 135,000 expectations, which is way below the previous month data. This is not a very good signal at all. So if the US job market remains resilient, gold could face further short-term correction. And if the NFP comes in higher, then we could consider short positions around key resistance levels. So in anticipation of today's trading session, I had already shared with us an update on both my TradingView and Telegram platform. I think it's on the 15 minutes time frame this morning. After, okay, let's see. Okay, this is it here. So this is what I saw this morning while I was reviewing the current market structure. And you know what happened? I sold the gold at that. Okay, let's talk about this first. So looking at the structure here, since Wednesday, after price tested that all-time record high at the 3,160-ish, we've seen price go through a retracement move. As you can see, connecting the series of lower highs, we have a descending channel, as you can see here. And you know how we use our descending trend line. As long as price remains below the descending trend line, we look out for selling ideas, right? Now, this morning I shared this simple setup here where I noticed that the last 1 hour prior to the publication of the signal this morning, I noticed a consolidation between the 3,110 and the 3,103. So I said here that I will be selling the 3,103, which for me is a short-term trading idea. So I don't want to be in that trade for too long, because the path of least resistance for gold still remains to the upside. So I joined the sell, and I think price moved about 100 pips thereabout, and I moved my stop losses to secure some position. And look at what happened. I got taken out of that position, and price indeed went in that direction to the downside. So I missed out on all of this. I don't know why I kept on missing out of trade this week. I don't know why. So I missed out on this. But for those of you who capitalized on that signal and maintained the objective there, well done, kudos to you. If you're still in that trade, you want to be moving your stop losses right now to secure the position. Now, moving into today's session, well, I'm still considering selling, considering the fact that price still remains below that descending trend line, right? Price still remains below the descending trend line here. Then I have this temporary ascending trend line. If you look closely, you will see that there is an ascending trend line right here, which beautifully shares a confluence with that 3,103 level, as you can see here. It's such a beautiful confluence right here, and we saw the breakdown of that structure. And from a technical standpoint, whenever price breaks down a key structure like this, we do expect that some point in time price may come back, retest the structure to continue the downtrend move. So I will still hold on to a bearish bias here, but wait to see price come into these trend lines. Now, what I will be looking out for is continued selling pressure around the structure right here on the 15 minutes time frame. If price continues to reject it, that is buyers finding it difficult to break above, then I will be joining a sell again from that particular area. However, if price climbs above this trend line, so I'm going to readjust this. So if price climbs above this trend line, so price will be back up. If price climbs above this 3,103, then price will be back above the trend line. Then I would like to see continued buy pressure above the structure to feel comfortable buying, then adding another buy position above the $3,110 area. So that is how I'm going to be navigating this market today. Let's see how the market will play out. So at the moment, I have no trades open, so I'm waiting to see what happens around the 3,103. If continued selling pressure persists here, we are going for a sell. If price breaks above the 3,103, then we are going to be considering a buy, as the breakout of that descending trend line could be a red flag that the trend line may no longer have the capacity to negate the bullish attempt anymore. So that is what I'm looking at today on the XAUUSD. Simple, beautiful trading setup, and what a crucial confluence to look out for new trading opportunities. So there you have it, my simple outlook of the XAUUSD for today. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Stay tuned in. All right. So I guess we are all on the same page. I hope you've marked out the structures accordingly. We are going to be using it to navigate the market today. So I think it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys this week. Though the first half of the week was very profitable, the second half of the week, due to the uncertainty in the market, we were not able to build on that momentum we started the week with. But I know there's still a lot of room for us next week to maximize our tendencies on this setup. So I will be trading the GBPUSD again next week. A continuation setup will be published during the weekend. So today we run through the USOILSPOT, the XAUUSD, and of course the GBPUSD, identifying simple trading ideas that we are going to be using to navigate the market. So today we need a lot of patience around the current structures we have. So I hope you do so, and always remember that every decision we make in the financial market is more or less an educated guess. So with this in mind, ensure you have a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from this discussion. If you did, looking forward to seeing you guys again on Monday as we come back again to prepare ourselves for the new week. So it's on this note I want to wish us all the best of luck today. I wish you a wonderful evening and a beautiful weekend. Bye.